Okay, we are live. All right, let's get started.
Cool.
All right, guys. Welcome to the Unnamed Hans and Doc podcast. This is going to be episode one. The focus of this podcast is mainly to cover broad markets, equity markets, crypto markets, a little bit of macro, and miscellaneous. We'll take questions starting in episode two. But just to introduce ourselves, my name's Doc. I have experience in financial markets since 2018 is when I bought my first stock. I've been in crypto since 2020. Nowadays, I've been doing this full time. I basically trade markets full time. That's how I make a living. And Hans, why don't you go ahead and introduce yourself as well?
Hey guys, yeah, I've been in equities since probably 10 years ago, 10, 12 years ago. Used to sort of trade stocks in New Zealand and Australia. I got into crypto in 2018. I was an Ethereum bull. Still am, of course, but I was a little bit more hardcore back then in terms of believing in the flippening of Ethereum and Bitcoin back in the day. But yeah, now I'm pretty basic now in terms of my core allocation of Bitcoin and Ethereum. But yeah, more of the long term investment horizon now, less day trading. So yeah, we're a good match, Doc.
Yeah, sounds good, buddy. So, what are we going to talk about today? I'm going to let you get started.
Yeah. So I think the first topic is probably we'll start with Bitcoin. Do you want to go on the sort of 1 day time frame?
Yeah, absolutely. Can you see my screen fine? I'll
Yeah.
get the screen recording working. Okay, we're gonna get off this chart. Pull up this. Let's get rid of these. Alrighty. So we can start with Bitcoin
Yeah.
today.
Yeah.
Alrighty.
So my kind of interpretation of this, and we sort of discussed this before we came on air, is that it does feel like a bit of a relief rally after a big technical sort of sell off down to the bottom. We've got the FTX disaster and stuff like that, and I do feel like it's a bit of a relief rally in terms of all risk assets. You've got the sort of insane rally in Tesla and the Nasdaq, et cetera, et cetera. And I do feel like there is some trading that happens between hedge funds that kind of trade the Nasdaq and Bitcoin together in terms of what's called pair trading. It's basically a strategy where you pair two assets together, and when they sort of go out of sync, you sort of trade the opposite to try before they kind of go back into sync.
Right.
So I do feel like there is a lot of trading between the Nasdaq and Bitcoin, and I guess that's kind of the root cause, that there is sort of an equity return to bullish conditions in the equity market. But I think
Yep.
we've talked about before that do feel like it is a bit of a relief rally and sort of the complacency rally. And I think in the future, in the next 6 months, I do not think that the Fed is going to become a lot more dovish. I think they'll keep on their course to sort of quash inflation. So I don't really think the macro environment's going to change that much. So I feel like, yeah, it's a bit of a hopium rally. I
Right.
don't know what your thoughts are on that.
Yeah. So my thoughts are kind of in line with yours. I am cautiously optimistic, but I'd say my baseline is still bearish, overall bearish. I don't think we have the participation in the markets right now to continue to lead to a bull market. At least nothing like ravenous like we saw in 2020, 2021. Could this be an echo bubble? Is it a bear market rally? Is it, complacency shoulder? We can call it whatever we want to call it. Ultimately, I think, yeah, this is kind of the result of everyone being bearish. Just a little personal antidote. My own family was, they don't know anything about markets, but they're like, hey, I hear the stock market's crashing. I hear it's going to go down way, way more and, et cetera, like that. So when you have everyone, it's kind of the inverse of the bull market, right? In the bull market, you had, Uber drivers and your hairdresser telling you to buy stocks and telling you to buy crypto. And now you've got the opposite where you've got people telling you, oh my God, hell is coming and doom is coming and a recession is coming. And, it becomes common knowledge. And when that happens, the market tends to punish the majority because, the way I look at markets is that not everyone can win. We all can't hold hands and sing kumbaya and make money together. We have to, the majority have to lose. So I think this rally is kind of the result of too many people being bearish, too many people believing, oh, Bitcoin 10K, 12K is guaranteed, and the S&P 3200 is guaranteed. And you even have guys like me who are looking at Apple and going, I had the Apple chart up and I was like, okay, there's a major support level on Apple it's probably going to break through, and we're gonna break through here. We're gonna get all the way to $100 and 120, but ultimately you got a massive bounce on Apple as well. So I think this rally is kind of that, putting fear into the sidelined people, putting fear into the bears that, has it bottomed, or is the market healthy? The data keeps coming in good, inflation's coming down. So I think this rally is going to be that major mental challenge for a lot of people of, have we bottomed, or should I buy back in? And then we might get the economic conditions worsening this year. We might actually get that, brutal recession and things like that. We can't keep lowering targets on stocks and whatnot. So yeah, that I agree with you that, this is it's still a bear market rally until proven otherwise. But yeah, I'm cautiously optimistic.
Well, I guess for me, it's also that we had that sort of quantitative easing from like 2009 to like 2021 or so in terms of easy money. This is the first like hard money, or like smaller money supply, shrinking money supply that was seen in like 12 years. So
Right.
I think like the whole Fed put thing, which is basically, for people who don't know, it basically means that the when the market sells off, the Fed will come in and lower rates or loosen money supply. That's basically what the Fed put is. So there's a whole question about, does the Fed put still exist? Will they come in if there's a huge amount of technical damage in the markets? I think it still does exist, but I think that the conditions under which it occurs is probably a lot lower than where we are right now.
Yeah.
I suspect only if it was like 50% down and stuff like that, or the bond market started to, have issues, then I think they would come in. So I think that they would allow a lot more damage on the chart to
Yeah.
become more like the loose monetary policy that we've seen in the last 12 years.
Yeah.
But in terms of like headwinds that are coming up in terms of the market, you've got, say, the debt ceiling fiasco in Congress, which might cause some sort of short-term to medium-term volatility in terms of, the debt ceiling and stuff like that. So who knows how that's going to play out. That could cause some volatility to like shorten this rally.
Yeah.
So for me, it's a difficult time. Yeah.
Sorry, just to interrupt. The debt ceiling historically always gets raised, right? Like there's almost no doubt that the U.S. is going to raise the debt ceiling again. I think there's even this silly bill that I saw, and I'm not too caught up in this, but that the Dems are trying to eliminate the debt ceiling altogether. Correct me if I'm wrong on that.
There's no, I mean, other Western countries don't really have such a thing as a debt ceiling. I think a debt ceiling is a bit of it's a US manufactured sort of thing that happened. No other country really has one, so it's a bit of a strange Americanism, which we like.
Yeah.
So yeah, there's that sort of macro stuff. There's the ongoing sort of issues in Ukraine. There's sort of just issues with commodities. There's also, in terms of this alt market, the big thing that's coming up is the XRP decision. For those who don't know, XRP and the SEC have sort of been at each other's throats for about a year and a half as to whether the XRP coin or the XRP token is an equity or not, or is it actually an investment and stuff like that. So that the outcome of that could cause like a mini bear or a mini bull run in alts. That is a pretty significant decision and will have huge ramifications for the entire industry. So please keep a hold of that topic in terms of alts and how they affect that. But yeah, so those are my two big pieces of like things to watch in the next sort of 3 to 6 months: debt ceiling and an XRP decision.
Yeah.
So those are the things I'm sort of bearish about in terms of, as I said before, my overall macro framework is that I don't think the Fed will be particularly dovish for the next 6 months. They need to act tough on inflation and make sure that it's quelled. Their inflation target is 2%, so they may need to see, multiple quarters of 2% to become dovish.
Yeah.
So it's quite.
I don't know if 2% is on the menu for now. I think that's going to be a very hard target to hit. I think that
Yep.
could, in an event that the market collapses and the Fed put that you're talking about, I think the best thing they could do is give confidence to markets. I don't know if they could do. I don't, because they brought out the bazookas, they brought out the heavy artillery in 2020. They can't do that again, right? That's just not feasible. They'll ruin us, right, if they do that again. So what could they do? They could just, they could play the confidence game. We're here for you guys. Maybe the inflation target isn't 2%. Maybe we'll reach, maybe we'll make it 3% for time being, or something like that. Or maybe we'll, pause hikes. There's things they can do in that sense. But I don't think they obviously can't go to do the same QE paradigm that they did in 2020. That's not possible. You're right about that, I think.
Correct. I agree with you.
Yeah.
So apart from Bitcoin, are there any other charts that you're looking at?
Before we move on, I just want to talk about one interesting thing on Bitcoin that is a hot topic for a lot of people. That is Bitcoin putting in, a break in structure? Has it put in like this intermediate bottom? And the intermediate bottom I'm basically talking about is like, if you're looking at like the 2018 cycle, we had this bottom right here where there was an accumulation phase into an echo bubble into another bottom with COVID, right? So the question on everyone's mind right now is, did we put in that kind of intermediate bottom? Are we going to do something in the markets where, maybe we have a continuation, maybe we get a pullback, maybe go to 28, maybe do something like this, and then revisit these levels, maybe the end of this year, maybe closer to the halvening, something like that. And there's this funny thing that, if you guys are watching this, there's this debate on whether Bitcoin is actually putting in a higher high or a higher low. And this is just based on how people see markets, right? So you look at market structure, you're looking at, here's a low, here's a high, here's a low, here's a high, right? So like certain people will see it this way, and this is how I'm seeing it. And then another cohort of price action traders is looking at this more simply. They go, there's a low, a high, and this whole leg right here is one low, and this is just simply a lower high. And then they think that we could go into another low if things get bearish immediately. So if you're looking at Bitcoin, you're feeling FOMO in crypto markets, and you're saying, well, how do I define my risk? I didn't buy any spot. I was bearish at 16K. I was bearish at the lows. I didn't accumulate anything. Where should I be looking to buy some? And I think, if you have no exposure, a good place to pick some up is say, okay, well, this was our support all of last year. This is basically our support until FTX launched us lower. We reclaim that level. Maybe look to buy something between 18 to 20K if you have no allocation to it. That's one thing that I'm looking at is like, without getting too technical into explaining what breakers are and something like that, you could look to defend 20K, psychological number. People might just put a bunch of orders there. Now that we're at 22, 23, 24, you could just say, hey, 20% pullback. Let me put some orders at 20. Or 18.6. And I think it's just one way of debating the chart. There's multiple ways to look at this. You can use moving indicators. You can use on-chain stuff. You can use like wallet addresses, minor capitulation. But if you're just like me and you want, bare bones, basic, broad spectrum ideas, I would say, maybe look into accumulating something on a pullback, and you'll have a signal that says, hey, if we lose this same summer support that held us from June of last year all the way into the FTX collapse, and we lose that once again, maybe then be cautious. Losing that on a high time frame, for me, that's going to be like a weekly. So that's just kind of some thoughts I want to give on the Bitcoin chart, because this move right here is confusing a lot of people on whether we're breaking structure, whether we're in a bullish market structure, whether every dip is a dip to buy, whether we're going to 30K. And I'd say just one step at a time. A high time frame perspective is just that, maybe look to hold 18.6 if it comes, be a buyer until 18.6 is lost. Once 18.6 is lost, maybe then you can reassess things and say, okay, we shouldn't have lost that if we're truly bullish, if we truly have buyers trying to support this market. That's just one thing I wanted to say.
Yeah, it does look a bit overbought at the moment. So yeah, I'm expecting a pull back to around that point there, 18K.
Yeah, I mean,
but I'm actually pretty I am actually pretty impressed with the recovery of Bitcoin's price, to be honest with you. I think like max bearishness in Bitcoin is kind of over. I don't think there's been like a massive, the end of the capitulation is over, but I'm pretty like satisfied about how it's performing, to be honest with you.
Yeah, and talking about health of crypto markets, like the Bitcoin dominance is going up with Bitcoin, which is always a good sign. Just a little tidbit that I want to throw in there. It's always a good sign when the Bitcoin rally is being, or when the crypto rally is being led by Bitcoin, it's always a healthy thing.
Yep.
All right.
Yep, for sure.
Moving on, we want to talk about stocks or anything like that? Equities in specific?
I think we could talk about Tesla and probably Apple.
Yeah, let's do that. The most important, the big boys. Oh my goodness. You know what's funny is I think Tesla's outperformed Bitcoin off the lows. What a bounce, my God. What is that?
Yeah, that is a pretty insane chart.
Yeah.
I think Tesla and Bitcoin, as we talked about before, are kind of like two brothers, in terms of how they react.
Yeah.
They're like highly sensitive to the Fed. Basically, the more you get around just like the basic fundamental analysis, the more you have the sort of earnings picture, which is well into the future, which is kind of like how tech is sort of how you measure the tech's performance in the future is how you sort of future earnings. So the kind of guys like Salesforce and Tesla, who kind of have that real bullish story in like maybe 2030, they are highly sensitive to interest rates.
Yep.
Whereas somebody like Apple, who have a great product, they have great cash, they have great cash flow, they don't really have that future dominance picture.
Mm-hmm.
They're a little less sensitive to interest rates. So it's kind of an interesting sort of thing. In my opinion, that's a big short squeeze on Tesla. It has to be, because I think the whole Tesla is a tech company versus Tesla is a car company is kind of the thing that, for me, the story of Tesla in the last 6 months has been, well, maybe it's not a tech company. Maybe it's just a car company. And the amount of competition that's happening in the EV space is increasingly high, and it's quite extraordinary, actually, the amount of EVs that has come onto the market recently.
Yeah.
So if you think about the PE ratio of something like Ford or, like a classic US car company, their PE is more like price to earnings ratio is more like 10 to 15, whereas Tesla is still at about 40. So it's quite interesting in terms of the fundamentals of Tesla.
Yeah.
Do you think that Tesla sell-off is a bit of a short squeeze? Because I think like the amount of technical damage on that chart is quite extraordinary. I do think that
I definitely
that shorts are getting squeezed.
So what I would say is that people probably are so bearish on Tesla that as it started bouncing into this location 120, 130, they're probably getting giddy and saying, oh yeah, this is a great opportunity to add to my shorts, or I don't have a position in Tesla, short position in Tesla, let me buy a position in Tesla, or buy a short position in Tesla in this zone right here. And then they just get pushed further and further. And then this leg right here is probably the squeeze. I think this occurred on earnings, right? Yeah, so that's probably it. Probably some good earnings. I don't know if there's manipulation. I hate using that word, but if they have like good data and they know that we're gonna squeeze these shorts right here, that could obviously be the thing. That could obviously be the case. I haven't paid attention too much into the data and analytics side of stocks lately, but I think there's an easy way to find out how many shorts got blown out or how much money shorts lost in the past week or so on Tesla, and I would assume assume that it's quite a bit because, Tesla was in the dumpster for months. There's just constant selling. Obviously, you're going to get a rally like this. Now, the real question is Tesla going to reclaim this sort of 180, 190 level, this $200 level that was support, from March of 2021, right? So you have a big correction from this top right here, held as once, held twice, was the same support that led to all-time high. It was, it was respected on the way down, a point of indecision, and now you've traded back into that level from the underside. Our buyers going to come in right now, right? So like there's the whole thing again, is that people who want to invest in Tesla were probably bearish right here. They were probably cautious. They were probably saying, okay, I've got time. And then this big move happens and it forces you to act. The market has this volatility, has this characteristic that forces people to do things they don't want to do. People probably have a plan to accumulate Tesla 90 to 100, 120, 130, and they get this move to 180, and now they feel like they have to buy. They're like, I'm missing it. I missed the bottom. It's going to keep going up forever. And if you just pull up a chart, well, this is the zone, right? This is the decision zone. Are we going to break through this? And I'd say, if it broke up here and it pulled back, this is your area to buy. You're saying, okay, well, this whole level right here, that was your capitulation event. That was your short squeeze. We're back where we need to be. Okay, let's buy at 200. I made a mistake. I didn't buy the bottom. Mm-hmm. But other than that, this is not an area where I think people should be FOMOing, This is not an area.
It's trading like a penny stock at the moment.
Yeah,
that kind of action's like a penny stock.
Yeah.
So.
Yeah, I mean Tesla's no stranger to volatility, right? Look at this chart. This is a disgusting chart for something in the stock market, for whatever a top 10, top 20 market cap company in the world. Yeah. I'd say they are. Yeah, this is trading like a shitcoin.
It's trading like a shitcoin, I agree.
Yeah.
So moving on to probably you were interested in SLV, silver
and
gold.
That is a question. So I actually do want a position in silver, and I was hoping that you could explain to me the metal thesis that's happening right now. That metals are performing really well over the past 6 to 8 months, and maybe we could talk a little bit about the correlation of DXY, the monetary policy, and metals, because I was writing off gold for a long time. Gold was underperforming inflation. Gold was underperforming the markets. It was trading sideways. It wasn't protecting people's capital. And now that seemingly inflation is coming down, now gold is going up.
Yeah.
So yeah.
Well, I think we talked about this. We talked about this before, but in terms of the whole, money supply versus gold discussion, it's kind of interesting that, people think that in a rising inflation market, that gold will automatically go up. But I think it's a little bit more subtle than that. And I think that we've discussed this before, that it's actually highly related to the strength of the US dollar, because gold is priced in dollars. Mm-hmm. You have an ounce of something and the right. price of the currency is changing. So obviously it's kind of that's why it's in US dollars, it goes up like that.
Yeah. That's a really good point that no one looks at. That's the denominator, right? So if the denominator loses value, the numerator is going to, okay, basic math that we don't often think about.
Well, I think there's a lot of there's a lot of fantasy and sort of all sorts of strange things about gold that, it's kind of like this asset that nobody really understands, but it's so boring that people understand it, but at the same time we really don't. I guess for me, it is highly correlated to the DXY, and sort of I think that during that sell-off, ironically there was a bit of a rally into the Ukraine war, and then it kind of sold off, looking at gold specifically from 2000 near all-time highs around the Ukrainian invasion. And then as DXY, as people went to the US dollar as kind of a safe haven during the Ukrainian war, Ukraine-Russia war.
Right. That was March 2022, yeah.
Yes, correct. That's why it rallied, because a lot of people were shit scared about so that people rushed to the US dollar, and probably some of it was Russian oligarchs making sure they had US dollars, but who knows? That's a conspiracy theory. So basically, when we get that US dollar rally, right there, that's the inverse correlation right there. So 2020 we're at all-time high on gold. DXY is at 96, and then we get that massive rally in DXY, and we get the sell-off in GLD.
Yeah.
That's how it works. DXY, GLD, inversely correlated.
Yeah, and you actually can see that.
So ironically, this whole discussion about it's a safe haven is kind of interesting. It's more to do with the strength of the US dollar than it is a safe haven or an inflation hedge. So if you think that like the US dollar is going to weaken over time, which is kind of a slightly a long, interesting discussion, it's more related to that than inflation.
Yeah,
So
you're actually perfectly right. This is 1-to-1. If we even mark out the dates right here, it's basically the inverse chart, right? You've got that March 2022 invasion that marked the top on gold, that marked the start of the DXY rally, right? And then we have, what is this, November? No, this is September 22 where DXY topped, and about October 22 where gold bottomed, right? So that is actually very, very closely, that's very closely, strongly inversely correlated. You're correct about that. Yeah, wow.
Because think about it, there aren't a lot of industrial needs for gold apart from jewelry.
Yeah.
So it means that the inflows into gold are more about standard investment flows of like somebody in a portfolio or they use it as a bit of a hedge against the dollar and stuff like that. They use it with the dollar. So it's kind of more of an investment instrument rather than an industrial instrument. It's kind of less related to something like, I don't know, iron or silver or something like copper, which are more related to the business cycle.
Mm-hmm.
So, when we're going into like a big bull cycle or like a big global growth spurt, copper will go up. So gold is more to do with DXY than anything else. Going back to SLV is kind of like loosely correlated to gold, but it's kind of more souped up. It's a more souped up version of GLD. But again, it's more volatile because it has more inflows from different things. It is more of an industrial metal.
Mm-hmm.
So it trades more like a commodity, whereas gold is sort of its own little world. But yeah, silver and gold, if you look at gold on that chart, yeah, I mean, it's kind of...
Pull it back up. Yeah. Have it over here. 1 second.
Gold on there.
Right there. Yep.
Yeah, see, they're quite correlated.
Yep.
They are to a degree. I mean, they rally in sort of... So if you look at gold, if you look at DXY, and you look at GLD, it's like bang on inverse.
Yeah.
Bang on inverse correlation.
Yeah.
Then you look at gold to silver, it's probably like 90% correlated, but more of a souped up, it trades more like a shitcoin, basically. Did you see that rally there from 18 to 26?
Yeah, that's
28?
Yeah.
I mean, that's pretty insane.
Yeah, I'm pretty sure a lot of money was made on that leg right there.
Yeah.
So yeah, the reason
silver is a difficult thing. I think it's quite commodities are kind of a different type of thing to invest in. I own some gold and some silver, but to day trade them is quite challenging. But you could.
So I look at everything now that trading has been sort of what I do, right? It's my everyday life. I look at everything in my system, right? So I'm a price action based trader, right? I look at everything from a supply demand perspective. I don't need market dynamics to tell me that. I can see it on a chart whether something is in demand or it's being sold at a heavier pace, right? The chart tells me all I need to know. For me, looking at this chart, like if I trade this like anything else, if I'm looking at this like a shitcoin, if I'm looking at this like a crypto, if I'm looking at this like a stock, what this chart's telling me is that it's in a potential to make a bullish reversal on a very macro scale in the next few years. And the reason I say that is that you have like a bubble, right? You've got an accumulation range, right? A breakout, a retest of that accumulation, right? So when you have this long area of accumulation, you've tested that for multiple months last year, and that level was held, right? So now you're having a bounce. So you're basically telling people, you're not welcome here. Price is not welcome here. We're going higher. So if that's the case, the natural place is this green box that I have laid out right here for bulls to defend. The gray box is what I speculated to be resistance. It's proving true. And the green box is what I speculate to be support. So for me, just knowing nothing about the fundamentals of metals, knowing nothing about the relationships that you just explained, looking at this just from a trading perspective, going, look, I want to buy silver at 21. If it comes to 21, 22, I want to be a buyer and speculate that we're going to put in a higher low into a higher high. That's what I think is going to happen. And I'm trying to capture this leg just as an investor and as a trader. And I don't know what macro thesis supports that, but I've seen a lot of people be bullish more on silver than gold. So maybe you can explain something of what's going on with silver. Is there a silver thesis, or are we all just being, convinced because the chart looks great and we want silver to do great? That's kind of the question there.
I think that you can think of Bitcoin like as gold. I'm talking about the relationship price action, not necessarily the investment thesis. Yeah, Ethereum is more like silver.
It's a beta asset.
Again, I'm not suggesting that those two are they're metaphors for each other. I'm just saying they act like that.
Yep.
I.e., gold does something and then silver will do it with steroids.
Right.
So
okay.
if you think that the DXY will continue to sort of fade away a little bit and weaken, then that's kind of the macro thesis, which is is DXY going? And I think that DXY does seem to be quite sold off at the moment.
Yeah.
So that for me, I think in my opinion, gold has done a big run, and I think gold will calm down for a little bit. These metals, they don't really move that fast. So I think for me, gold has done a massive run to recover from 1650 back to like 1950. So I do think that gold will cool off. And when I say gold will cool off, that basically means that silver will cool off. Yeah. So I'm not particularly bullish on those things for a little bit. I'll just be interested to see how DXY reacts. But I wouldn't be overly bullish silver. By the way, a lot of these metals are like relatively manipulated. It's not as much of a free market as we think. So it's difficult to predict the price action.
Yeah. What's funny is I've done pretty well in navigating the market in the last 2 years, despite all the volatility. What's really funny is that I have been kind of embarrassingly wrong on DXY, the way up and the way down. And if you look at this chart and you zoom out, it's kind of funny to be wrong, because you're like, it just went up in a straight line and it's just going down in a straight line. How could you make so many mistakes?
Well, I think that, and I think somebody made a comment in the chat the other day about Bitcoin dominance and about DXY. So for me, charting DXY and charting and using standard technical analysis, supply demand, it's not so easy because DXY is a basket. Okay.
Yep.
And I'm presuming the underlying assets for DXY, it's around 50% is Euro USD, probably 20% is US yen. I'm not entirely sure the percentages. I know that 50% is the euro. I think the underlying currencies are definitely more chartable, but when you start to put assets together in a basket, I'm not entirely sure that this is a really actively traded asset, so to speak, as DXY as an asset. It's more of a combination of different currencies put together.
Yep.
Same thing, the discussion about Bitcoin dominance. I don't think you could chart Bitcoin dominance because it's literally just a percentage of different allocations of assets put together into a percentage.
Yep.
I don't think people actively trade Bitcoin dominance. I know you can.
I think people make
dominance, but I don't think it's really that actively traded.
It's not actively traded, but it's looked towards. I use the Bitcoin dominance chart in my own trading actionably every time Bitcoin dominance drops towards 40, 39, 41. I get very scared in altcoins. I say I don't want to be an altcoin buyer. I don't want to be an altcoin accumulator. Actually, I want to be a seller of altcoins. I want to clear up capital because I think the market is overheated and there's too much greed in the market. So I think there's value to that. I think we do the same thing with DXY. We look at DXY and we go, okay, it's having a really strong rally. That's bearish for risk assets. We use it similarly. Probably don't trade it one for one, but you're using that data and making actionable calls with that data. But yeah, just zooming out.
I think DXY will probably calm down though. Looking at that chart, I mean, it's had a hugely volatile couple of years. Yeah. I think it will calm down. I think gold and silver will calm down.
Yeah.
I feel like the last year has just been a bit weird for those assets. I'm not a huge gold bull right now. I own gold, but I'm not like overly bullish that it's going to go to like 2,500, 3,000 this year. I think it's just going to keep around because it had a lot of issues. Went down to 1,650, so I think it's just going to hold around here.
Yep.
As I said to you before, these gold takes a long time to move.
Yep.
It doesn't trade like an equity or a shitcoin. It takes a long time to move.
Yeah, definitely. Agree with you there. I think just the last point about DXY is I've been calling for a bounce. It feels like months. I thought about DXY. Yeah. I'm like, okay, this is an area of support. We should get some reaction here, right? And then I saw on the daily chart, I was like, okay, this is, pretty exhaustive selling. We should get a bounce. I'm looking at this and I'm like, okay, here we go. Here's the relief bounce. Nope, failed lower low, right? So kind of every level DXY is just sold off. And it's very hard to, once again, be sort of bearish on DXY. You look at this and you say it's a very clear level of resistance. We're coming into that same level. We should technically get a reaction, at least a bounce on DXY here, which would, should give a correction.
If you think DXY is going to bounce, which I agree with you, it does look like it will have a bounce of some description.
Yeah.
Then that's bearish. That's bearish metals.
Yeah, I mean, it's bearish risk assets as we've seen as well. It's bearish Bitcoin, it's bearish Tesla, right? Bearish NASDAQ, everything like that. So very interesting months coming up, and we're going to be paying very close attention to this. I'm sure everyone that's active in markets is paying very close attention to this. We're at a sort of inflection point in all markets. And I think the last thing we should talk about before we leave is just ES, the ES chart, and some thoughts on ES just to wrap things up. Yeah. So I just want to point out.
As I said before, I think in a tightening liquidity situation like we are with quantitative tightening, the price to earning ratio on the S&P does seem a bit rich.
Mm-hmm.
I do think that this is a relief rally.
Yep.
And I do think that we're going to be challenging that all-time high.
Yep.
Of 3,200.
Yep. I think we started off our talk today giving our thoughts on, did we talk about, I'm losing track now, if we already talked about the complacency shoulder thesis and how everyone was bearish. Did we talk about that? I believe we did, but just to reiterate now that it's all together is that, I kind of believe that, too many people were bearish at the bottom. Everyone was looking at 3,200. Everyone was looking at lower prices. Everyone was buying puts. I think we saw like record put buying and everything like that at the bottom. We have, your grandma, your hairdresser, your taxi driver talking about a stock market crash and a recession and everything like that. And we're getting this bounce. And I think, this level that we have here at 41.20 has sort of defined us for a year. Right? If you just look at the chart on the monthly candles, support for multiple months, resistance for multiple months, a bounce, a rejection, another rejection, we're trading back into it again. So what would get people baited? What would the stock market do to bait a lot of people is just pushing a little bit higher. Close a monthly candle up here. You close a monthly candle up here, everyone's starting to look at higher prices. Oh, all-time highs coming. Oh, look, we're up, 30% off the floor. We've rebounded so well. Markets are good. Inflation's down, everything like that. And I think what would be really, really painful for people is if this traded to 4,400, 4,300, and then put in that lower low. So I think that's something
I
people should
think
be
that's going to happen. Yes.
so people should be very cautious
'Cause,
of is something like this, and try not to get too bullish when we're at 4,300 and 4,400, and actually look to be taking profits and taking some risk off, because I don't think we're in the environment yet for new all-time highs, but I could be wrong.
No, I don't think so either. We're aligned on that. I think that the Fed chair does think of himself as a Paul Volcker, which basically means that he's going to quash inflation. He's going to be famous for it. He wants to go into the records book as the guy who sold inflation. So he's going to hold interest rates quite high for quite a significant amount of time until CPI comes down month on month. He has to see month on month CPI data that's around that 2%, 3% target before he even starts to loosen policy. That could take 6 months.
Yep.
So this rally, I think this rally started when there was kind of a bit more of a nice CPI figure. I could be wrong.
Yeah, it did. December. Yep.
Which basically,
Yep.
So people just, that was the narrative around it. Whether or not that's actually why it turned, I don't know. A lot of this is sort of there are a lot of directional traders on this that they have momentum. They have momentum algos and stuff like that are just getting on this new trend.
Yep.
But I think without a huge big pivot in terms of to more dovish, we're going to get into that bit of the bull trap territory that you're talking about.
Yep.
But yeah, in general, I do think that we're going to go down to 3,200. It just seems baked in. So I would be pretty cautious right now. I'm accumulating equity because I think that we'll have a fairly bullish 2024, 2025, but 2023 is a time for accumulating.
Yep. Good thoughts there.
Okay. I think we're good.
Yeah, let's leave people with a little bit of something to worry about. Is the meme the meme Wall Street cheat chart, and what could happen if we do get to that 4,300, 4,400 level. This is what awaits you, gentlemen. So don't get too crazy at the top.
Yeah. That's an interesting chart. It'll be interesting to see if it plays out.
Yeah, I hope not.
I don't think the Fed will allow it to. I think the Fed put does exist still, but I don't think it will come in until about 3,000. Interesting chart. I do like that chart.
Yeah.
So,
it's actually
that chart implies that we're going to get a relief rally in 2038. So
yeah, that's pretty depressing, right? That is depression. Yeah. No, I hope it doesn't play out. I hope it's still a meme, but it's uncanny every level that you look at this, how well it works, right, on the 2-month time frame. But yeah, anyways, I hope it doesn't play out, but be cautious.
At least you're not showing a megaphone pattern, so we're good.
Yeah. All right, Hans.
That's my favorite. My megaphone, the megaphone pattern with a megaphone increasing from like 1930 or something.
One of these.
1930. Yeah. It means like we're gonna go to like depression levels in the stock market.
Yeah.
Anyway,
I hope not.
We're just memeing now. So yeah, thanks for the chat, and I think
absolutely.
We'd like some welcome feedback on what we should be covering in this podcast, so we appreciate all the listeners.
Yeah, leave some comments, guys, what you guys want us to cover next week. This is pretty freehand for now. We're just enjoying each other's company, enjoying talking markets on weekends, and hopefully we can entertain or educate someone out there. But yeah, that's me, that's Doc, and I will talk to you guys next time. And Hans, it's been a pleasure.
Thank you, Doc. Pleasure as usual. See you guys next week. Bye-bye.
All right, buddy. Later.